Hey there, it's Andrew Ebeyer again, and in today's video we're going to be going over how to sync your personality with your trading style. And this topic never really crosses the minds of most traders, and here's why. They typically pick up a strategy or two, test them out a little bit, and lose a little money at it, get discouraged, and then they just kind of move on to some other job or some other form of business, and they just leave trading at the door. And to my knowledge, this topic has never been taught at any great length in any education that I've seen personally, and that is a mistake. And that's why we're adding it into Market IQ. Because I would see this all the time. I would see some people doing well with the strategy and some people struggling with it. And I just started to wonder, like, why is that? Like, and that happened to me. I would see a strategy that other people would do well with, and it made no sense to me at all. And the reason why that is because, like, people are different, and people understand things differently. And people have different things, different factors going on in their lives. And when it comes to a trading strategy, you would think that it would just be this mechanical process that works for anybody who put the process into place. Like a machine, like the trading strategy is the machine. So if anybody were to use a particular machine, it would work in the same way. Like when I press a gas pedal on a car and you press a gas pedal on a car, it does the same thing. But learning the exact same strategy for two people, it doesn't work like that. And it should, but it doesn't. And because if you think about it, like, it doesn't make it a bad strategy or a good strategy, because if it works for some people, then it's a good strategy for some people and it's bad for others. So what's the hang up on this? Like, why can some people learn how to trade and others can't? Like, is it intelligence? Is it like mathematical prowess? Is it some Rain Man type of memory? And quite frankly, I mean, no, like, that stuff, that doesn't matter at all. Like, it really doesn't. What matters is that, like, you need a base level of knowledge in how the market moves, and what you need on top of that is ways to make that fit with your personality, with your schedule, so that, so that you realize it's not a one-size-fits-all formula. You know, it seems like it should be, but that's not the case. It's different for everybody. And that's a big focus of what we're doing here at Market IQ, is making sure that everyone is in the best possible position to succeed. That's why we teach multiple strategies. And, really, like, you create your own trading game in your mind. So trading is a mind game, and you create it in your mind based on your beliefs, your observations, your risk tolerance, and really just like your unique set of circumstances that you've been through in your life. So, since trading exists in your mind, you have to give consideration to your unique experiences and your background and your future goals and how that's going to affect you moving forward and when selecting a trading type. So in this video, we're gonna help you do that by uncovering the 4 different types of traders. And we're gonna list just kind of some of the benefits and the drawbacks of each style of trading. So I've attached below the video a couple tools to help you when assessing your personality. So just be sure to go through those and really thoroughly work through them so that you have a good understanding of what your natural tendencies are, what your personality tends to be like naturally, and it'll help you pick a trading style for yourself. Because if you fight against your nature, it usually ends up pretty messy. If you go around acting fake all the time and just trying to push yourself into something that you're not, what you end up with is a lot of people who don't truly know you, and it creates a very disappointing situation for yourself and for others. So we don't want to let that happen to you with trading. We want you, when you're answering these assessments and when you're just going through and looking at your life and your natural tendencies, just be honest with yourself. You don't have to try to fit yourself into a mold. You don't have to try to mimic my trading style or Logan's trading style or anyone else. You don't have to mimic anyone. You just have to know the base knowledge of how the market moves, learn a few strategies, and see what resonates with you. Because when you're learning how to trade, it's complicated enough. You don't want to be swimming upstream trying to learn something that just doesn't vibe with your personality. It just doesn't, it's just an unnecessary obstacle to put in front of yourself. So what are the different types of traders? Basically, we have scalpers, intraday traders, swing traders, and position traders. And the main difference between all those different types of traders is the amount of time that it takes for each trade basically to be started and completed. So as you move down the list, you go from scalpers all the way to position traders, and the time frame for each trade gets longer and longer and longer. So a scalper is a trader who likes to enter and exit the market frequently. Just like it sounds, they're scalping the market. They're just trying to take a few pips here and a few pips there over and over and over again in order to make profit. So usually these trades take under 1 hour to complete. You get in, you get out, you wipe your hands, you repeat, you do this all day long over and over and over again so you can churn out some profit. Now, the key to scalping is understanding what it is. With scalping, you are required to enter and exit the market with extreme efficiency, which means you have to win a high percentage of your trades. And the reason why this is because with other trading styles, you might enter a trade where your risk to reward ratio is 1 to 5, meaning you have to risk $1 to make $5. In scalping, however, these positions are a lot smaller, so maybe you have to risk $1 to make $1. And because of this, you don't have the room for error. You have to be right on a higher percentage of your trades. Okay, so if you risk 1% per trade, and out of 10 trades, you hit 8 of those trades, you've got an 80% strike rate. And that's really great. That's going to get you 8% of your account. But let's say you are a swing trader and you have 4 positions that are worth a 1 to 4 ratio. Out of those positions, you only have to hit 2 of them to get that 8%. So you have to be right less often, and you have to spend less time on the market. So basically what I would say is the appeal of scalping is for traders who tend to be more impatient, and they really are trying to build up their account quicker. So if you're impatient and you're also willing to just take small profits, and you're probably gonna miss some bigger profits, that's fine. It would work for you. But really, like, a successful scalper, and I can't say this enough, you really have to know what's going on in the market because you have to win a majority of your trades. So if you want to get into scalping, you can. However, it's kind of flawed to me. I don't think it's a great strategy when you're starting out because, look, the decisions come at you faster. You have to be better. You have to really know what's going on in order to really do well. And on a deeper level too, I disagree with scalping because why did you become a trader in the first place? Like, did you become a trader so that you could monitor, so that you could be at your computer for 10 hours a day, monitoring trades in and out and getting in and out of trades for 10 hours a day? Like, I'm pretty sure you got into trading so that you wouldn't have to work a 9-to-5 job. And if you pick up scalping, you're just replacing your 9-to-5 job with scalping. So, like, fundamentally, it's a good way to build an account really quickly, but you have to be good and you have to be willing to put in a lot of daily time. It's like a job. So, I wouldn't try to build necessarily a whole entire trading career around scalping. Personally, I'll take scalping. I'll do it at certain times. If I don't have any good longer term trades and I want to make a little bit of money, yeah, I might scalp for a couple days because I know how to do it and I have enough experience in the market to where it doesn't faze me. I can take a few scalps and be good to go. But that brings me to our next style. The next style is intraday trading. And the term intraday means within the day. So just like it sounds, this trading style is going to be completed within 1 day. So in scalping, you're taking positions that last 1 hour at a time. Intraday, you're taking trades that last for an entire day. So the goal of an intraday trade is to buy price at the low of the day and sell price at the daily high. Basically, so let's say price opens at $10 and it dips down to $8 before rallying up to $12 by the end of the day. Well, within your analysis, you want to be able to pick the stock at $8 and sell it at $12, therefore profiting on the daily move. And the reason why a lot of people like to be intraday traders is because it exposes them to less overnight risk within the trade. Because something can happen within your trade overnight that completely messes up your position. So like, let's say, for example, you had a trade open with Apple and Starbucks, right? And let's say that Starbucks, that night you go home and on the news, it says that Apple phones start exploding when you ask Siri where the new Starbucks was. And you're in Apple and you're in Starbucks. So like, needless to say, you would probably be upset that you were in those trades overnight. So that's one advantage of intraday trading, is that you're not exposed to any sort of risk like that. Now on the other side of that, a trade might not move very much in the middle of a day. So your profits can be minimized a little bit. So if a trading day is slow, you might not make a ton of money for that day. Also, getting in and out of positions, you'll be paying commission to your broker. So there are negatives, balances, and benefits and drawbacks to that. What I would say is intraday would be the shortest time frame I would suggest getting in on. I would wait on scalping until you really have at least a year under your belt. A lot of people like to fixate on scalping, and that burns a lot of people. So just be a little bit more patient with it. If you want to, if you want to scalp, do it on your own. But like, intraday is where I would start. That's the shortest time frame I would trade on for sure. Alright, so that's intraday trading. And the next thing that we need to talk about, the next one in the progression, is swing trading. And swing trading is one of my favorites. It's what I started on. It's my preferred method now. I'm a mix between a swing and an intraday trader. But swing trading is where you hold a trade for multiple days at a time, and you're trying to catch big chunks of movement in the market. And typically they last 3 days to about 2 to 3 weeks. So that's a really good amount of time where you can get into position, have the position run, and you don't have to check the charts every 2 hours, every 2 to 3 hours. You can just let things kind of go, and it's really nice for trade management. So this frees you up to do schoolwork, to work your 9 to 5, to spend time with kids, to travel, to go to baseball games, hang out at the beach, whatever you want to do. You can have a trade running and still live your life. That's the beauty of swing trading. And I think that's why most of us get into trading in the first place, is so we don't have to go and do a 9 to 5 and miss out on the things we want to do. And really, like, that's where you start to get the enjoyment out of having passive income come to you, really without doing anything. And you might be thinking, like, you don't want to wait that long to collect profit, but honestly, you'll see that it's worth it, because with scalping, it's such a pain. And with intraday trading, it can be a little painful as well, especially if it's a quiet day in the market. But with swing trading, you're catching large, significant portions of the market. And also you have more room for error because your risk to reward ratio is so much higher. So as a swing trader, your position can be met with risk. It's that overnight risk that we talked about. So your position can be going well for 2 to 3 days or a week or so, and then all of a sudden a huge news event comes out and it takes your position back to where it started, and you don't make any money on it. And that can be hard to reconcile with on a psychological level, but generally you don't have to worry too much about that, because on a higher time frame, positions are going to work out much more frequently than they do on a lower time frame. Okay, and look, I would rather leave money on the table than have to be at the computer like all day long. You might think that the growth might be a little bit slower with swing trading because you're waiting for so much longer, but in the long run, it's really worth it. And the next one, I'm just gonna touch on this briefly because it's position trading, and position traders hold positions for weeks to months at a time. And honestly, you have to have a lot of money for that to pay off for you, because if you have $1,000 and your trade takes 2 months to really get through, like if you make 4% on your $1,000 over the course of a month, it's like $40 in a month. So like that's not exciting for anybody. Like that doesn't work. Now if you had $2 million, you could do that. You could make 4% over 2 months and you would be ecstatic. So you know, swing traders and intraday traders, that's where we want to live. That's really the basis of most of our strategies here at Market IQ. You can use some of our strategies to scalp, and you can use them to take longer positions. However, we're really living in that intraday to swing trading realm. So resources underneath the video, take the personality test, really dial it in for yourself. See which one is gonna work out best for you.